So mid-February is upon us, which means Valentine's Day is just a couple of days away, but it also means it's time for your monthly real estate market update. And I know you're excited for it. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And as I was going through some notes and looking at some um, different surveys and different news items to put this month's real estate market update together, I spent some time looking at last year's updates and where the market was at a year ago. And man, what a difference a year makes, to be honest with you. You know, we'd experienced a time of inventory levels, number of homes for sale starting to go up. There was quite a bit of talk that, there was uncertainty with the economists on where we were going to be at with regards to a recession. Um, Interest rates had been going up, although they'd leveled out and just started to decline. Price appreciation was tapering off or settling down, I should say. And the expectation was that housing was going to slow a little with all of those things there. Wasn't necessarily going to die off, but it was stabilizing and definitely slowing. Well, fast forward a full year, and none of that actually happened. So if we look at recession, talk of a recession, here's the interesting thing. That's virtually disappeared. You may remember we touched on that briefly last month. But when you go back to 2018, of the economists that were surveyed, 67% thought that we would be in a recession by 2020. That hasn't happened, obviously. If you go back just a few months to October of last year, 34.2% of all of the economists surveyed expected that we would be in a recession at some point during 2020. As of January, just last month, the number of economists that think that is all the way down to 14.3%. So a huge difference and drop off. Bottom line is that housing is really strong. And since the update that we did last month, one of the biggest things has been interest rates. I mean, they fell yet again. I actually received an email yesterday, and they were offering 30-year fixed rate mortgages at 3.25%. We are beyond 50-year lows for mortgage rates here. And in addition to that, for the first time in quite a while, builder sentiment is very high. New home builder sentiment is very high, and housing starts have greatly ramped up. As a matter of fact, the last report I saw, they were showing annual housing starts expected to be in the region of 1.6 million, which is great because we have been underbuilt for much of the last 2 to 3 decades, to be honest with you. Even when you look at the 2010s, the last decade, we built about half as many as we had in the previous decade before that. So it's taking a while for those housing starts, for new construction to pick up and catch up on how short we were with regards to inventory. So what exactly does that mean? We now know that interest rates are really low. The economy is strong, housing is strong, and the amount of inventory, as we said, is going down and buyer demand is going up. So where does that put us overall? What does that actually mean for you if you're considering selling or if you're considering buying? Well, if you've caught any of the updates or videos I've done in the past, you know that home prices and housing is simply a matter of supply and demand. Right now we have a very constrained supply. Even though I mentioned that the builders were picking up, there were more homes expected to be built, the number of homes for sale in the country, new and resale, is running at about 1.4 million. Was running at about 1.4 million. That number of homes for sale hasn't been seen since 1993. When we flip that over and look at the month supply, we're currently running nationally at about a 3-month supply. When was the last time we were at a 3-month supply? Never. That's the lowest since any of the records that I follow have that I've tracked where the national number has been below or at 3 months. Now, in Southern California, where we operate, we've seen a month. In North Texas, where we also operate, we've also seen it just over a month in there. So again, it is local. There are going to be pockets that have inventory lower. There are going to be pockets that have inventory higher. And that really does depend on the area of your country that you're in. But when we look overall, inventory in general is low. So we have a constrained supply. We also have record low unemployment. There has been wage growth, and we have record low interest rates. All of those things together are fueling buyer demand. As I mentioned at the beginning of this video, the inventory that we expected to start to see climb or did start to climb at the beginning of last year has all been sucked up. It's all been taken away by this buyer demand. So if you're a buyer, don't get discouraged. Inventory is going to be tight. You're going to have to make a decision on whether you want to look at new homes or resale homes. And first and foremost, if you happen to see last week's video, get pre-approved. Get your financing in order first, because as these home prices have moved, the most important thing that you can do is make sure that you stay in budget for you, that you're comfortable with the purchase price and the mortgage, and that you get all of that financing taken place up front. Then you're going to have to be patient. Make a wish list. Look at the wants versus the needs. Understand that you may not quite get everything. If you're a seller, one thing that changed, and one of the other reasons why inventory has been low, is the amount of time people stay in their home has greatly increased. It used to run at about 6 years on average. Now it's 9 to 10. So why is that? Well, one of the reasons after the Great Recession is a lot of people lost all their equity. They were in a negative equity position. They lost everything, and it's taken time to rebuild that equity. In fact, for homes sold last year in 2019, the average amount of equity people had was the highest it had been in 13 years. It has taken a long time for that equity to come back. Saying that though, depending on which survey you look at, between 70 and 80% of all homeowners believe that now is a good time to sell. And I would have to agree. Interest rates are phenomenal. Equity has been built back, and there's going to be more of an option for you to possibly get into that dream home you've always wanted, or make that move to the area that you've been looking for. And as your home comes onto the market, it's going to free up it's going to create inventory for those move up buyers that are looking at your place. So overall, the real estate market's really strong, and it's expected to stay that way for the remainder of the year, especially considering that interest rates are now expected to stay sub 4%, not only for this year, but all of 2021 as well. Now, whether or not that actually happens, your guess is as good as mine. And again, many of the numbers that I've gone over here are statistics. They are looking at the markets overall, and we do know that real estate is local. So if you'd like more specific information to your area, your zip code, your community, please reach out. I'd be happy to put you either in touch with someone in your area that can provide that for you if I can't, or we'd be happy to provide it ourselves.